earnings then. Again, a big day. HUL will be reporting Q2 numbers. Mangalam is here with the key expectations. Mangalam.
Well, for HUL, if you look at the macro setup, there has been rural recovery, but it may be offset by some urban slowdown. Price reductions will lessen this time around as the company talks about, price and volume gap narrowing, and raw material prices are also firming up. And more importantly, remember the company has taken an increase of almost 25 basis points of royalty to the parent. At the same time, GSK Consumer, the OTC business comes off, and there were one-offs in the base as well. So all of these things will impact the reported numbers. But put all things together, what we're expecting, the key metrics to watch out for will be 4 to 5% sort of volume growth that will come by, led by 1% price cut, and margins will remain stable year on year. Revenue, as a result of which, grows about 2.5%. You're looking at a number closer to 15,665 crores. EBITDA grows 1.5%. That implies that margins stay around that 23.5% mark itself. And the net profit sees a mild decline of about 1.5% at closer to 2,700 crores is what we're looking at. Volumes between 4 to 5% is something that the street will like. Two things I'll be watching out for in particular when it comes to the segments. Beauty and wellness, the segment that they carved out last quarter itself in terms of reportage, should grow higher than the industry, should grow higher than the overall category. And also, we have food and refreshments, which should grow 5 to 6%, largely because of inflation and tea and coffee. Home care expected to grow 4 to 5%. Personal care expected to stay flattish due to, reduction in price cuts. What's the outlook on the ice cream business? The future for that is something that we'll also keep an eye out on from the management, apart from festive season demand.
Okay, all right. Outlook on the ice cream business. Thank you for that. That's what we're expecting from HUL. But Mangalam,